But first, breaking economic data just crossing the tape. Rick Santelli has that for us. Hey, Rick.
Yes, Leslie, good morning. Factory orders, these are fresh June numbers, expecting minus 4.8, and that's exactly what we get, minus 4.8. That would be the weakest since the first month of 2024, but I do want to point out, in the rearview mirror, there's a bit of history. 8.2% up for last month becomes 8.3%, which makes it the second biggest number in the history of factory orders, which dates back to 1956. So we see that the tariff issues have really created lots of big numbers. Now, if we strip out transportation, it's up 0.4, a little better than expected following an upward revision the last month from 0.2 to 0.3. Durable goods. Now, these are final reads. All the durable good numbers we had mid-month, these will replace them. So the mid-month read at minus 9.3 becomes minus 9.4. And once again, that's rather historic because it is basically one of the biggest numbers ever. But this series only goes back to 1992. Now, let's strip out transportation. It's up 0.2. So we could see how aircraft played a huge part in that big up and down back-to-back months that we've had. And if we look at shipments down 0.8, down 0.8. That would be the biggest negative shipment, minus 0.8 is orders, and that would be the biggest since it was minus 1.5%. That was in April of this year. And of course, that's a proxy for capital spending. We want to see some positive numbers there, and it really has been trending in the wrong direction. Shipments now up 0.3, largely as expected. We see interest rates at 4.21, wildly unchanged. And if we look at a 2-year at 3.69, that is also unchanged. Green and equities unchanged in the fixed income markets. It certainly seems, though, post-number, the market's pretty much at an equilibrium, trying to figure out what comes next in the labor market and from the Fed. Leslie, back to you.
Rick, thank you so much. Our Rick Santelli for us.